Hi, welcome everyone to another episode of Vantage Point by Digi Janus. In the previous episode, we spoke to a lot of fintechs and they told us how they're disrupting wealth management. On our panel, Mike Kruger made a very interesting comment that he was looking forward to open banking, banking as a service, banking in a box. And so we asked him for a recommendation of who we should get. And today we have with us Kelvin Tan, who is an intrapreneur, trailblazer and the global lead for Standard Chartered Nexus. Thank you, Kelvin, for joining us on this episode of Vantage Point by DigiJanus.
Thank Lash for having me. Thank you.
Thank you. Okay. And so we just want to get started very quickly. We have a very wide audience. So we'll get started with some simpler and easier questions. We want to warm you up really well. So there is so much talk about bank in a box. Oliver Wyman says it can result into X $100 million opportunity, etc. So what exactly is bank in a box and why is there a need for it today?
Well, I mean, bank in a box, banking as a service is like one of those terms like Web 3.0, DeFi. It's up to anyone, and pretty much everyone wants to take a shot at defining it, and nobody has a clear clarity as to what it is. So, my definition of bank in the box / banking as a service is really quite simple. It's the technical ability as well as the regulatory expertise of a bank of a chartered license holder to provide for digital ecosystems to become a bank to their end users without the heavy lifting of becoming a bank. So effectively, what we call the Intel Insight model, whereby you create the ability for multiple digital banks to be supported by a single charter via a scalable technology as well as a product solution.
Oh, that is really good. Now, we have so many digital only banks coming up. We have really good digital bank offerings from the banks out there. Why is there a need for a service like this?
Well, it's really quite simple. And this is the reason why we are called a Standard Chartered Nexus, right? Some people ask, why is it Nexus? Now, there are many complications in setting up a digital bank. And some people will have the appetite for getting a license on their own, setting up the stack from scratch and building the business from and the book from scratch. Most people won't, right? Most institutions or organizations won't. So the reason we are called Nexus is because we are a confluence, essentially a nexus of sorts, of a few points of interest. The first is from the perspective of the regulator. By offering the services via a charter account, a charter holder such as Standard Chartered, it allows for the regulator to be assured that the key controls and measures will be in place as with any other license holder, and the key reports will be in place to the regulators. For the regulators, nothing changes. The central bank continues to regulate the banks the way it has always done, but yet create a new scalable models that also pushes the agenda for multiple things such as financial inclusion, such as innovative digital banking products. For the bank, it creates an incentive and a scalable model for customer acquisition and balance sheet growth exponentially without having to invest in branches and sales staff and all the fun stuff that we used to do in the 1980s and 1990s. For the partners, in our case we call them partners, in other cases customers, the digital platforms that become banks via this mean, essentially it's an easy way to do it without having to go through the pain of applying for a charter, setting aside capital, building out the stack from scratch, putting it together via multiple vendors, and then doing multiple testings and alpha, betas, whatever you want to term them, to get to production and getting to live. And on top of that, setting aside a whole bunch of money to acquire, retain, and build that business. Most people start without knowing how painful it is to become a bank, and then as part of their journey, they learn about that. And finally, for the customers, the end users themselves, a collaboration of this sort really creates the ability for them to experience a hyper-contextualized kind of banking, right? Because the essence of the collaboration between a bank and a digital ecosystem like what we do at Nexus, that essentially creates the ability, mandates the ability for data sharing from the digital platform to the bank in order to set up and change the way the bank onboards and underwrites an individual, as well as offer products within the customer journey on the digital ecosystem itself. For example, just to bring this to life to you, let's say you are a user of a e-commerce app who has partnered with us, and then what you are accessing is the e-commerce banking capability, so to speak. Now, nothing stops us, therefore, from using that e-commerce database to be able to offer you timely products as you check out, as you peruse products, and or as you make payments. So that really changes the way customers experience banking, not just from a retail, but possibly from an MSME standpoint as well.
Oh, that is amazing. So I can call this as a win 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 win. Regulators win, they are assured that the platform is taking care of all the regulatory stuff. Banks acquire customers at a much lower cost. Partners can offer embedded finance. Customer get a hyper contextualized experience. So this sounds like a very good proposition. Now a little birdie tells me that you are an intrapreneur and you pitch this. So to honor you, I'm actually wearing this shirt which says hashtag scratch to scale, because you built this from scratch in Standard Chartered. Just walk us through that journey and why did you go about it?
Oh, no. I mean, most people who know me will know that I am enthused by the largest, biggest, hairiest problems and try to solve them. And one of the biggest, hairiest problems, at least as an employee in Standard Chartered, was the scalability and the scaling of the retail and the SME business across the world. And that was a thorny problem. And this was 4 years ago, before embedded finance or banking as a service even became a term. And so this was my proposed solution to solve that particular thorny problem. Long story short, it took a long conversation, multiple conversations with many senior members of the bank to put this together with great support. And from the first line of code to pushing the platform into production, it took us maybe about 19 months, give or take. So it's been a long, painful journey. But we've learned a lot along the way, and we will continue learning as we roll out to multiple countries across the world.
Thank you so much. And, I really wish there were more folks like you in banking who take the innovation bull by the horns and, tame it. Nothing like pleases me more than to bring out an innovation story which has started in a bank. Now, this is great. You mentioned something that you have learned some really interesting lessons in the last few months. Let, Talk us through a couple of them that you think the audience should know about.
Uh, the big one is, how do you institute, or at least how do you influence the mindset change required to do this, right? Mass market onboarding, mass market risk underwriting is very different from what traditional banks would generally target more lucrative segments of consumers and SMEs look like. So that was a huge learning curve in terms of how do we nudge individuals who haven't actually done this, or who haven't had to adopt a new mindset to solve these problems, to get onto the boat and move this along. I think that was a real lesson learned. That it's always better to bring people in early on and have a win-win conversation than it is to try to push your agenda through without fear or fervor of backlash. It may work, and it's not a absolute. So it's not like you always have to seek for the win-win, or you always have to like push your way through. It is a matter of balancing when and how you have those conversations, depending on the context of what you're trying to solve for. That was a big win. I think for me, the biggest learning in my last 3-4 years of this is probably that. And then the other bits are obviously what you look for in a partner. How do you ensure that the cultural elements are similar? How do you ensure that the execution focus is similar? How do you ensure that the contractual discussions and the key terms of those contracts reflect the values of what we want to build together, and ensure that there is skin in the game for both parties, both the partner and the bank, to make sure that this thing succeeds. Otherwise, generally, things like this will die a death. And there are obviously millions of initiatives in the graveyard of bank innovation that has seen the end of its days, and we are still at the cusp of discovering how big this can be. And I'm not going to say that we may be one of those that die, and but we may be one of those that scale exponentially and recreate the way banking is viewed. And like you said at the very beginning of this show, there's massive opportunity here. I believe the latest number touted around embedded finance globally is a $7 trillion revenue opportunity. So let's see.
Yeah, that is very interesting. what is more interesting is both your partners that you have already gone ahead with are both in Indonesia, so Bukalapak and Sociala. So uh, you again made a very interesting comments. You have to look at the partners and you have to see how both of them can come together. So what do you look for in a partner when you go out and build something like this?
Well, the joint vision, right? That they are the partners that do and agree with us that while they want to create the use cases for financial services so that the customers remain stickier to their ecosystem, they are not in the best place to create those use cases themselves. And they are not in the best place to actually work through the investment required to build out a bank end to end. So the joint vision of saying, okay, we can create a seamless user experience, an embedded experience with the bank, uh, is paramount. And if and both of these partners that we have announced are very much like us in terms of what they're trying to do. They're experimenting with regards to scale, obviously in a very different format and very different context. But they're experimenting in terms of scale, in terms of how we provide these services, and how big we both agree this thing could be for both of us. So that, I think, the joint vision is the key thing. And obviously, as you interact with multiple partners, and we are upfront about this as part of the partner engagement process. We've not, even just in Indonesia alone, we've dealt with multiple partners before ending up with the two that we have ended up with. So we have learned that some partners work well, some partners won't work well. As part of the negotiations, you can generally tell which ones are the ones that will fall away.
Absolutely. And this has opened up a box of questions now, because this is very interesting. Kelvin, what we are talking about here is not innovation as a concept. We are talking about an idea that all of you came together with. You got the funding for it, and now you are doing it in real world. So don't mind my excitement on and all my questions, because this is a very rare occurrence in such a short duration of time. So when you go in a partnership like this, what what would phase one look like? What would all of you offer to your partners in phase one?
So very soon, I'm hoping very soon, we will see the public launch of CASA, and then followed quickly by debit cards, followed quickly by lending across the course of 2022. So you would access, and I can talk about this publicly because there is a Instagram site set up by the partner, so I'm assuming they're okay to talk about it publicly. It's BukaTabungan is going to be live. BukaTabungan is effectively the Bukalapak bank, so to speak, right? And you will be able to get a BukaTabungan account, you'll be able to get a BukaTabungan debit card, and you'll soon be able to take loans on BukaTabungan and access them via Bukalapak the same way that you will access all banking services via an app. So essentially, that's phase one. Then we are going to start to solve for phase two for SMEs. Obviously, Bukalapak has a very big Mitra population that we'll need to look at. We'll also need to solve for other multiple products and segments, as well as multiple countries. So we are already talking to partners in Malaysia, in Vietnam, as well as other parts of the world, and we're looking to roll out. Obviously, the banks. From the bank's perspective, the bank's ambition is to roll Nexus out in a few markets outside of Indonesia. Once we've demonstrated some scale in Indonesia in the coming year. Sorry.
Okay, that is interesting. And so the phase one is accounts, debit cards, loans, etc. Now, this brings a question, and I ask you this because Indonesia has a pretty robust digital lending industry. There are fintech lenders, digital lenders, etc. So, why did Bukalapak choose to work with you rather than amalgamation of different fintechs? Because with the fintechs, they will obviously, because of their scale, they will have more negotiation power, better margins. So why did they choose to work with Standard Chartered Nexus?
No, I don't think it's rather than, right. So Bukalapak does work with some of the fintech lenders in Indonesia, and we are well aware of that. So the difference is that Nexus provides you with your own bank, the fintech lender's card, right? What we provide outside of lending, obviously, algorithmic capabilities and underwriting is going to be pretty standard, and we'll be able to create whatever innovative lending product embedded in the client journeys with Bukalapak. But more than that, we are going to promote for them actual interest-bearing accounts, not just wallets with transaction caps and no interest-bearing other than cashback. We are going to give them actual interest-bearing accounts with cashback, with no transactional limits, with potentially in the longer run cross-border capabilities. If you think long term of what this could look like, I think it's a far more exciting proposition, but it doesn't again prevent them working with the existing fintech lenders in the country, which they do anyway. So that's I guess the difference. And over time, while the fintech lenders are great, and more of them are starting to evolve as well, and they're thinking about getting into banking themselves, right? Quite a few. Credivo has bought a bank in Indonesia, so all of them are thinking, because the buy now pay later model as a core lending proposition is had its day. Obviously, Klarna looks great from a valuation standpoint, but if you look at all the listed BNPL players across the world, all their shares plummeted about 80-90% in the last 3 weeks or so. So there's a limitation, and there are big questions around profitability on just lending as a fintech player, even in Indonesia alone. So let's see.
Yeah, that is a very, very interesting point that you bring up about BNPL and fintech lenders, and this not being like a competitive streak. You guys could all work together. Now, don't mind me asking this, but it seems like you are taking banking to platforms where the customer is already. So you are literally offering banking without banks. So are you commoditizing or diluting the value a bank adds into the banking ecosystem?
No, I turn it around and say that I'm actually leveraging on the very value proposition that the bank brings to the ecosystem, which is its expertise on balance sheet management and risk, and then putting them into the very places where the customers are, and leveraging the expertise of those partners, which is UI, UX, and customer experience, to then marry those capabilities and putting the end users at the heart of everything that we do. And that's, in my mind, leveraging the value proposition of the banks more than diluting it and commoditizing banking, so to speak. Now, there obviously is the argument that, oh, are you relegating us to being infrastructure dumb pipes, so to speak, right? And many people say that. I take a very different view. Some people say dumb pipes. I say I'm elevating the bank into becoming a massive infrastructure player as opposed to just being a distribution point. Now, if you take that particular view, and infrastructure players around the world make massive margins, great return on equity. So why wouldn't you do that?
Absolutely. And we will come to this infrastructure player because there is one question I want to really ask you after all the stuff I've heard from you. So, now, this really seems like a very interesting journey. You guys are working with partners. There is a great value proposition. Uh, you are an innovator. How do you, and I am sure by the success you are seeing, there will be so many other banks who will offer bank as a service, or there will be other players who will do that. So, how do you stay ahead of the game? How do you innovate? What do you do next?
Uh, well, we are not married to any outcome. Well, we are married to an outcome in terms of obviously numbers, but we're not married to a long-term outcome in terms of how this thing works, right? Nexus is fully agile, and we iteratively change things as we go along. We're solving for many problems on a daily basis. So how do I keep ahead? No, I don't actually worry about other competitors in terms of what they do and whether or not they offer banking as a service. In fact, in Asia, in Southeast Asia specifically, nobody else really does, outside of Standard Chartered Nexus. In other parts of the world, there are players. Some market themselves as banking as a service, but they are not really. They are infrastructure, they are technology platforms that enables banking as a service for banks. And some players are truly banking as a service. I can imagine Solaris is probably a proper banking as a service player. Green Dot in the US, and so on and so forth. So no real competition anyway in this particular region, and in most of the footprint for Standard Chartered that I have seen. But obviously, people will start coming. I've also heard rumors about multiple players moving into the space. So generally, we don't spend too much time thinking about it. We focus on making ourselves better every single day. And maybe that will work, maybe that won't, but time will tell.
Thank you. That is an amazing answer. So, Kelvin, that is very interesting. You mentioned there are independent banking as a service providers, and then there is Standard Chartered Nexus. How do how are they different, and how do they operate in a market like this?
I mean, there are many gradations of how banking as a service is provided, but simplistically, there are really two categories. There are banks with the charters that are actually offering this service via a in-house technology solution, which is what Standard Chartered Nexus is. The difference between Standard Chartered Nexus and most of these other banks like Green Dot and Solaris is the fact that Standard Chartered has almost 40 licenses in multiple parts of Asia, the Middle East, and Africa. It's the footprint that makes it very, very unique. In order to, the ability for Standard Chartered to provide banking as a service in a wide-ranging range of markets, regulatory environments and requirements. So those are banks with technology solutions that provide banking as a service. Then there are the guys who are really technology platforms that rely on the bank on the back end, right? That they interface with the partners or their customers and say, here we go, here are the APIs, you can build your banking as a service capability. We give you the technology side, and the bank charter is being held by some bank at the back end where you place the balance sheet. So those guys like Rails Bank, for example, as well as maybe the likes of Synapse, do that. So I don't see them as banking as a service providers. They are banking as a service enablers for the actual banks behind them. So it's I guess semantics, but and some people might get very offended by saying that, oh, hang on, what are you saying? I'm not a banking as a service provider. But it's a matter of definition, and I believe those are the two key categories of banking as a service today.
Okay, and how does banking as a service differ from open banking? Because I think you mentioned something there. So how does that differ? Open banking as a service from open banking, API banking, etc.
So banking as a service is a business model that's being adopted by either banks or technology platforms to channel fees and or balance sheet. The open banking philosophically is about the control of data, of the individual's right to enable access to their data, to their bank's data, for their conveniences and for very specific use cases. So if you look at how open banking has evolved and has been established in the UK and Australia, which are at this point the two more advanced ones, and Bahrain coming up the line, it's essentially saying that Kelvin has the right to insist that the bank provides specific data about him to another player via a verifiable third-party platform. So the likes of who is that in the UK? There are a couple of players in the UK that provide this, and then because the platform, say a telco or a utilities provider, is able to access your banking information, they are able to provide you with some service that they couldn't provide with you before. So open banking, from that perspective, is specifically about the user's capability to control where the access of their data for specific use cases, through a secured means, obviously. Oh, I just remembered the player in the UK is TrueLayer, which essentially becomes the aggregator for open banking data. So so that for me is the primary difference. Obviously, again, many people have different definitions of open banking versus banking as a service, but for me, that is the primary difference. One is a business model, and the other one, while could become a business model and has become a business model, is effectively the philosophical approach to data ownership.
Okay, that sounds pretty good, and so I think that definition is pretty on the point because these concepts become very confusing, as they are used rather, contentiously within the industry. So uh, now you mentioned that everybody wants to be an infra player. There is a very big controversy brewing right now where there is an e-commerce platform who is not happy with an infra player's fee for transactions. So, and this is like a huge platform. Why are they not using banking as a service, API banking, and all of this stuff that is available to them, and going for that rather than having this public debate around this topic of
Well,
processing
I
fee?
mean, I mean, I believe. I mean, if I operated an e-commerce platform, and most people will agree, when you are solving for the core business of shipping goods and ensuring that it gets to your customers and they get paid, clearly it makes a lot of sense to enable the kind of payment capabilities that they have enabled with the infrastructure player that you speak of, right? And over time, as more use cases, as the platform matures, more and more use cases come about, there will be clamor for how do we provide financial services. The bigger players, some of the really big ones, would think, can we do this ourselves? Right? Can we go get a license? Can we build it? And if you really look at it, Amazon is already a bank. If you split it up, right? There's a long article about this a couple of years ago, about Amazon India, and if you really break down the parts of Amazon India, it really is a bank without having to achieve a banking license. So there are ways to skin the cat. So there are many players who are thinking about banking as a service and what it actually means for their capabilities and what they can offer to their users. So I'm not saying that it doesn't exist, and it will, and I'm just saying that their current spec, the public spec that you speak of, is generally an outcome of a existing arrangement that supported their e-commerce business over the last couple of years, right?
Absolutely. Now, everybody that we speak to, and this discussion is taking a very interesting path now. Every banker I speak to, uh, they are worried about how big tech would become banks or offer banking. And I am just thinking what Standard Chartered Nexus is doing is taking banking to networks. So it is only a matter of time that some big tech comes and uses this service to become their own bank. So how how do you look at that? One, is there a probability of that happening? Two, does that mean because they're so good at UX UI, knowing what the customer wants, they will completely offer a very hyper personalized contextualized bank? And three, do you think actual banks, the legacy banks if we call them, would be able to compete with them? So three parts to that question.
So let's start with this, right? Depends on what kind of bank you are in assessing the opportunity. Uh, if you are a single country bank, say in the US, right, a community bank of sorts, or then yes, potentially the big tech moving into banking is going to be a threat, because it is not unconceivable for a big tech company to get a single banking license. I mean, Grab has done it in Singapore, and Grab is not exactly big tech in the true sense of the word, right? Not a FANG uh, player, so to speak. Now, yes, that's a threat, because if they do get their charter in the US and they do provide banking services, then it becomes a significant conversation around how big that threat will be. Now, then you reflect upon it and say, okay, if you are not a single country bank around the world, right, and you are something like a Standard Chartered or a Citibank or HSBC, or Barclays, then the question is it realistic for big tech to go out and acquire 30 different licenses around the world to ensure that Amazon everywhere is Amazon Bank, or that Google everywhere is Google Bank or slash Googleplex, as and when they ever resurrect that particular conversation? Now, I don't know about you, but my personal opinion is that getting 30 licenses around the world will take a very long time. And the effort and and capital investment required for that particular endeavor, it, I doubt will make any kind of business sense, at least in the immediate terms.
I
Yeah, correct.
absolutely agree with
So
you on that. So, just a side point there. I absolutely agree. One of the things that I think that big tech is most reluctant to do is get regulated, even in their current business model. So going out there and taking 30 business banking, 30 licenses for banking in 30 jurisdictions is going to drive them to their worst nightmare even faster. Now, what happens if they don't do that? Because the win-win-win of banking as a services, regulators are happy because Standard Chartered Nexus is doing all the regulation. E-commerce is happy because they can bank upon that at just work on the front end UX part. So let's say they don't go out there and take any licenses, and they say we are going to work with a banking as a service provider. That will be pretty workable. How do you think legacy banks would compete with that?
Well, legacy banks could very well adopt the same approach that SCB has adopted, right, in terms of creating that technology capability to do the same, right? The question is who gets there faster. Now, it took us 4 years to get from PowerPoint slides to actual platform in production. So perhaps it could be faster for someone else, and then they could make different offers to different players as we go along. Nobody knows how this space will play out. My personal belief when I first embarked on this journey is this: the first mover of establishing that capability in multi-market will lead the conversation, and that's what we intend to do.
Absolutely. And this is a very, very interesting conversation around embedded finance and banking as a service. Uh, what role do you see banking as a service playing for the next gen customers? Because it is getting very expensive to acquire and retain these customers, brand loyalty is dropping. And so, what do you think? How do you think banking as a service will help with the next gen customers?
Not from that end. In fact, my fundamental belief is that there is almost no bank loyalty for the next gen customers. Right? Next gen customers will be loyal to the brands that they use on a daily basis, will be loyal to the customer experience that they like on a daily basis, and therefore, what we are doing is embedding these particular financial capabilities with those brands and letting them leave their loyalties where they lie. And while at the same time enjoying those services that are, I guess, the lifeblood of any economic activity, and allowing for the bank, whichever bank, and in this case, I'm hoping Standard Chartered Nexus, obviously, scales up to a point whereby we become a massive infrastructure player in the global economy.
Absolutely. Now, it has been a very interesting conversation. And I want to come back to your partnerships that you talked about, Bukalapak and Social Leo. So, what does that partnership look like? You guys have decided to work together. You have decided on the phases. So, what do? You just take a white label, color code it, and send that bank towards them, or is there more complexities to the two organizations starting to work together?
Of course, there are multiple complexities, but we are iteratively and interacting with one another regularly, right? In terms of making decisions of what the product value proposition looks like, the user journeys, the branding, the marketing, the plans, all of which we are in very tight loops with our partners. In fact, I believe there is a very regular, uh, I don't want to call it a committee because it's that word is almost antithetical to
Let's
what we
call it
do,
a tribe.
but a very regular tribe of sorts
Yes.
that effectively plots out what we do together, and how we're going to execute it. So it requires constant interaction between the working teams at all levels. The tech guys and the tech guys in terms of integration and any kind of evolutionary changes that are required, security, the product guys in terms of designing the product, the value proposition, the fundamental P&L of how it works for both parties, because obviously it needs to make sense for both parties to embark on this journey. And even from a governance standpoint, from a risk standpoint, what do we need the partner to help us with, right? Because some parts of the journeys or some things will be with the partners, and how do they give us assurance that these risks are mitigated so that nothing blows up for the customers. So that has been actually a very fun learning journey between us and the partners so far. And I believe that what we learned in our first two implementations will be very much reusable in multiple implementations across multiple countries over time.
Oh, that is very interesting. And yeah, I'm sorry, I have the curiosity of a 2 year old today because this is very fascinating for me. So let's say you have delivered a really interesting offering, right? You partner with platform A, you also partner with platform B. How does, like, platform A in this case is Bukalapak, let's say, and the platform B is Sociala. Both of them are in Indonesia. Both of them are your partners. How do they differentiate their own banking or financial service from each other?
Oh, let me be very clear. The fundamental guiding philosophy of how we partner is that the partner's value proposition will always lead the design of the product. So the product that you see on Bukalapak will be different from the product that you see on Sociola, purely because the product needs to be designed to ensure that the customer gets a better user journey with the partner, and support the value proposition of the partner. So we would like to ensure that the users use the partner more often for specific use cases. And Bukalapak and Sociola are really not competitors in the strictest sense, right? Because they service different segments, they sell different kind of products on their platforms. So there's no real conflict of interest in that discussion. So yeah, the deposit account for Bukalapak will look very different from the deposit account on Sociola.
Okay. And so we are coming towards the end of this discussion, and this has been really interesting. So usually when I do this discussion, and when we end an episode, I ask people one question: that what would they like to change, in open banking or wealth management, wherever they're working. So, but for you, I have two questions. I don't want to end with one. So the first question I have for you is, what advice will you give to other entrepreneurs within banks who have an innovative idea, and so how they can become successful as you have done? And two, what is one thing you would like to change in the open banking space today?
Okay, let's start with one. My advice to aspiring entrepreneurs is don't do it. Uh, I'm joking, of course. It is. I mean, let's not get flowery-eyed in terms of what has been achieved. And in fact, I believe we are still a very long way off from what we want to do, a million miles away. In fact, but the journey is tough. It is painful. Getting a bank with a massive infrastructure and a big balance sheet in multiple countries to do something like this is not been an easy journey. I mean, as much as I say that there's been great support, and there has been, there's also been great resistance. And this is something that if you're an entrepreneur, you have to learn to put up with. So if you ask me, the one defining trait of entrepreneurship is not intelligence. It's not genius capabilities. It is grit and audacity, right? You need to be comfortable with the fact that you will and you may very likely lose your job because of this. So if you have that, and you think that you can deal with the pain that comes with it, then I'd say go for it, because the satisfaction of seeing it come to life is incredible. To your second question, what would I change about open banking overall? It's a wish list, it's a dream list. I don't think it'll ever happen. Is a consistent global standard for open banking data exchange, and from a regulatory standpoint as well, because that would truly change the game in terms of what the banks need to build. Right now, every country you roll out in has customized requirements, and that's going to be quite painful, and that's what is really slowing down the approach of open banking around the world. But that may change. I see that some countries have issued out white papers on open banking, Indonesia being the latest one that I've seen. And slowly, I think we'll get there, but perhaps conservatively, not in my career lifetime.
That is an amazing answer. So, any entrepreneur, if you are listening, my summary is, if you are the guy if you are the person who hits a wall, and you are the one who's standing and not the wall, you are an entrepreneur. So that is my definition of it. Please don't try this at home. I do not want to receive complaints about this. And thank you so much,
Yeah,
Kelvin, for
definitely don't try it at home.
yeah. So I have gotten in trouble a couple of times for suggesting that, that a good entrepreneur is someone who hits a wall and he's the only one standing. So please absolutely don't try that at home. Thank you, Kelvin. This was an amazing discussion. I learned so much more about banking as a service, and I'm sure our audience appreciates it even more than I do. So thank you so much for joining us.
Thanks, Lash. I really appreciate being here. Thank you.